keeping you in the spotlight then, Tim, so how do you see hotel financing across Europe? Obviously there's lots of investment strategies and we're talking about sort of equity, mezzanine, senior debt, but how do you see the financing position?
So we've done, as you know, quite a lot over the years. Having said that, hotel finance in Europe remains very much a domestic-based model. We'll probably talk about cross-border deals and all the rest of it, which get all the headlines and are very sexy and all the rest of it. But if you look at the actual volume of deals and the relationships, they are predominantly domestic, because with operating assets, as Nicolas has mentioned, that you've frankly got to be on top of these things, and you've also got to really understand how that particular hotel plays in that particular market. And whilst I might like to think I know London pretty well, I don't really know Budapest as well as I should if I am a lender. And of course, lenders always go back to one of their core principles, which is you should really be lending on your patch, wherever your patch is. And you've therefore got to be absolutely clear, do you really understand the markets that you're in? And with something like hotels, and being a relatively fragmented industry, it has always typically been domestic, been local. Having said that, if you go back 10, 15 years, capital did become a lot more international and a lot more European, and we started, doing and feeling comfortable with transactions in and around Europe. But very much, you then see that the policies of the lenders come into play. So, for example, it might be that you're UK out, so you have a UK lead relationship, but you will fund out. And the analogy I always give is, I was actually funding a hotel as it happened in the Brazilian rainforest, but my relationship was 2 stops down the Jubilee line. And I think this gives you the context around how the market has evolved. And I think it's really important because, we fund into a cycle and things change, and it's really, really important from a lending perspective that you've got access to your relationships. And that's why, for example, we would not fund a Romanian investor, not because it's not a good deal, it's just because it's not on our core patch. But I think what's also changed is that the number of lenders and non-lenders into the space has dramatically increased, but also trends like, for example, how the debt capital markets have come into what you would call below investment grade quality deals. Very, very good deals, but with but not with a pure senior debt kind of, or indeed junior debt space, but a new, a very liquid market. We can talk a bit about those a bit later on. But the market is still very domestic. You do get cross-border deals, which are great. They are relatively small in number, and the reason is that the market, the markets are domestic for the reasons I've just described.
I'd just be